Welcome to another edition of the Boy Study Group. So now, today we are going to be doing cost, volume, profit analysis. Like cost, volume, and profit. So, you know the cost. The volume, you can see that volume of units, or how many products did you produce, and the profit. So this topic is how the volume of units produced is affecting the cost and the what? The profit. So there are different formulas and there are assumptions in it. And the assumption number one, sales unit is the same. Is the same as production unit, meaning that what you produce is what you sold. Now, the next one is that what your variable cost per unit is the same. Another one is that contribution per unit is the same. Fixed cost is fixed. Now, with the knowledge of this, we'll just say we should solve questions. We will not start saying we want to define. Is when they ask us questions, then we will now know what to do. So let's pick the question and let's solve. Let's look for one question that contains a lot of, that will use a lot of formulas. So do you have any game? Check the pattern. Okay, so we are going to be looking at, treating questions from item part, page 238. So now, a company makes a simple product. So we are dealing with simple product now. Are you there?
Yes.
A company makes a simple product and sells at 80 naira per unit. That means if I want to itemize now, my selling price is what? Is 80 naira. Now, they said the total fixed costs are 360. Total fixed cost. 360,000 for the period. The contribution per sales ratio, which we can also call, they say CS ratio now. Contribution per sales ratio is what? 60%. Now, what is the budgeted production? Budgeted production stroke sales 8,000 units. Now they say to calculate the margin of safety for the period as a percentage of the budgeted sales. I can pass. Yes, the new one, 2025. 236. No, 238. Yes, just go to 38.
236.
238.
Okay, how much?
Yes. Have you seen it? Price is 80. Total fixed cost 360,000. CS ratio mean contribution per sales ratio equals to what? 60%. And production, budgeted production and sales is equal, like we said. Sales is the same as production. Sales because what they are taking and what you sold, what you bought, and what you produce is what you want, is what you do. So now They say we should calculate the margin of safety. So they are saying we should calculate the margin of safety. Now, before one, what is margin of safety? Margin of safety.
Imagine the point where we either make profit or
No, that's good. Margin of safety is the area above the margin, the break-even point, where you know that okay, in this area I will surely make profit if I enter this zone. So that's margin of safety. So now, margin of safety is what? Budgeted sales minus break even. Now remember that this is margin of safety in, if it is in value, we will have budgeted sales minus what? Break even point in what? In value. Is it showing? Now, margin of safety in units. Budgeted sales unit minus what? The break-even point in what? In unit. So that's margin of safety. So now, we need our BEP in unit. We need our BEP in sales unit. Now, they already told us that the projected sales is what? In unit is what? 8,000. Meaning they're giving us this one. What do we need to get? We need to get this one. So now, if it's that they gave you in amount, in value, you go and get BEP in what? In value. But the budgeted sales was giving you what? Unit. You need to get your BEP in what? Unit. And what is the BEP in unit formula? BEP in unit equals total fixed cost over what? Contribution per unit. Now, our total fixed cost we were given, right?
Yes.
Contribution per unit we were not given. And we know that contribution per unit is what? Selling price minus what? Variable cost per what? Per unit. Right?
Yes.
Now, what is our selling price? 80. Now, we can also use our CS issue to get our contribution, but we can go in different ways. Now, we don't know CT per unit, we don't know what. We know selling price, but we don't know what variable cost per unit. But we know what CS issue. Now, CS issue is saying contribution over sales or CS issue or contribution per unit over sales. Sales per unit is what? Selling price.
Yes.
If I divide sales per unit, it's still what? Selling price. Well, I can see selling price. I will still get the same thing as CS ratio. What they did is that they divided contribution by unit to get, they divide contribution, they divided by what? By unit, we got what? Contribution by unit. Sales, they divided by unit. When you divide sales by unit, we get what? Selling price. So what is our contribution per unit? We don't know. What is our selling price? We know. What is our CS ratio? We know. What is our CS ratio? 60%. 60% is what? 0.6. So that means 0.6 equals to what? Contribution per unit over what? Our selling price is what? 80 naira. So I can get my contribution per unit as, when I multiply, I should get 48. 48 what? Naira per what? Per unit. Now, after getting this 48, now we know our CT per unit, right? And we know our total fixed cost. Then I can say my what? My BEP in units equals total fixed cost is what? 360. 360,000 divided by 48. That will give me what?
7,500.
7,500 what? 7,500 what? Units. Now, I know my budgeted sales 8,000. I know my break-even point unit as well 7,500. Then I can get my margin of safety. So my margin of safety MOS will be what? The formula is above here. So that's what? 8,000. 8,000 what? Units. Minus what? 75 units. Then I'll get what? 500 units. But the question is telling us that we should get margin of safety in percentage. With what? As a percentage of what? Budgeted. So they are being specific. Normally that's how you do it. So that means if I want to do it as a percentage, that means MOS as a percentage. Check it. MOS as a percentage will be equal to what is MOS?
500.
500, right? 500 over the same as a percentage of what? Budgeted sales over what? 8,000 times 100 over 1. So I can say this cancel this. I can say 4.
6.25.
This is good. Okay, yes. 6.25. So that is it.
Thank you.
So now we move on to the next question. So now the next question, number 2, practice question 2. Now the first thing that I always itemize what I tell you that giving when you do that first. Itemize. Now they said a company makes and sells a single product. The following data relates to the current year's budget. Now, sales and production units 8,000. So, sales, production units is what? 8,000. Variable cost per unit is 20 naira. Fixed cost per unit is what? Is 25. Then I said CS ratio is what? Is 60%. What did we were able? Now, they told us, okay, they gave us that one. They now told us that the selling price next year will be 6% higher, and then so we will have to do this one first before we go get it. Now, budgeted cost next year, so they are even talking about next year too. But let's do for this year. Now, required for the current year, calculate the budgeted contribution per unit and the what? The budgeted total profit. Now, let's start. Now, they say we should get budgeted contribution per unit. That means our first solution, AI. They say we should get our what? Projected CT per unit. Now, for us to get CT per unit, you know that CT per unit is what? Contribution over what? Over unit. Right? That means I need to know my unit and I need to know my contribution. What is my unit? My unit is 6,000. Now, what is my contribution? We're not giving anything like contribution here, but we're giving CS issue. Then I can use CS issue to get it. Now, my CS issue, which I also said is what I explained that you can see it as what? CT contribution per unit over what? Over selling price. Right? So now my CS issue is 60%, that was 0.06 or 0.6. What's my CT per unit? I don't know. What's my selling price? I don't know. That means this formula, I can't use it. Contribution per unit, I don't know. Selling price, I don't know. Right? Now, the only way I can do it is what? I'm only giving my variable cost per unit, right? Now, then I will not use this formula. Then what I will now use what I'll do, I know that contribution equals to variable, or I will just say contribution per unit equals to what? Selling price minus what? Variable cost per unit. So now what is my variable cost per unit? Is what? 20 naira. Do I know my CT per unit? No. Do I know my fixed cost per unit? I know my fixed cost per unit. Now I was giving what? Sales production unit. So now we will still use this one, but let's take cost now. That means I can say minus what? Minus 20. Selling price is what? CT per what? Unit. And I also know my CS issue equals to what? CT, my CT per unit over what? Over selling price. Right? What is my CS issue? 0.06. That means 0.6, sorry, 0.6 equals what? CT per unit over what? SP, I mean, selling price. Then if I cross multiply, I know my CT per unit equals what? 0.6 what? 0.6 what? SP. Now, I can say this one is equation 1. I can say this one is equation 2. You can do it in different ways. This is the way my thought process is moving. Now, this is equation 1, this is equation 2. Do you get it? Now, I can now put, because they say that you get my CT, I mean.
Yes,
now, if I'm to get my CT, instead of going through all this black, all this nonsense, I can just say that, let me make SP, CT. So, let me make SP the soluble formula. Then I can say my SP equals to what? CT per unit over what? 0.6. Now, then we'll now put this one, put it here, right? Or we can say, this is also like saying 1 over what? 0.6 times what? CT per unit. Now, 1 divided by 0.6 is what? 1.66. Or, you know, what? 10 divided by 6 is what?
1.66.
Okay, now, we can say this one is 10 divided by 6 CT per what? Unit. Now, put this, put it here. That means my CT per unit equals to 10 over 6 CT per unit minus what? 20. Right? I can take this one here. That means CT per unit minus what? 10 over 6 CT per unit equals to what? 20. So now do 1 minus 10 over 6 is what? 1 minus 10 over 6. It's giving you a negative number. The other way we can do this, is transfer this one here, transfer this one here. That's 20 equals to what? 10 over 6 what? They are not wrong. Minus what? CT per unit. I was looking at, I didn't call it like it well. So now, 10 over 6 minus 1 is what?
10 over 6 0.667.
Continuous, I mean. Now, then we can say this one, but what's the figure? 10 over 6 minus 1. That's what? 10 minus 6 over 6. That's 4 over 6. So you should be getting 2 over 3. It's 2 over 3 that give you this thing now. 2 over 3. Right?
0.6.
Yes, now we are going to use 2 over 3 now. So that means 2 over 3 CT per unit equals to what? 20. Now, when I cross multiply, 3 times 20 equals to what? 2 CT per what? Unit. 60 equals to what? 2 CT per unit. That implies that my CT per unit equals to what? 89. I told you can do it many ways. It's my thought process that is going like this. Now, we are given CS ratio is 0.6 abi. Now, wait. Abi, you've paused it abi? Just pause it. If you don't get this actually, if you don't get this process, there's another way of you doing it. We know that contribution, contribution now equals to what? Sales minus variable. So now when I divide both sides by what? Unit, I'll get 75. If I divide both sides by sales, if I divide this side by sales, meaning I'm dividing all the sides by what? By sales. So now, what am I doing? Oh, calm down, I will cut it. I get it. CT, I'm trying to make it easy for you now. CT per unit equals to what? Selling price, abi? Minus vehicle cost per unit, abi? If I divide both sides by selling price, so this one is something they give us that know. So let me explain this one. We're given, this is the data we're given. We have the limited data here. They give us CS issue, FC per unit, VC per unit, and sales production. Now, they say we should get our projected what? CT per unit. The way we can, our projected CT per unit was contribution over what? Unit. What is my CT per unit? I am aware that my CT per unit is what? Selling price minus what? Vehicle cost per unit, right? New formula. And I also know that my CS ratio is also what? CT per unit over what? Selling price. Now, I'm given this, then I can bring something out. So if I do this formula, I can get what is here. Now, CT per unit minus selling price minus what? 20 is what? The variable cost per unit. Now, for this one, CS ratio is what? 60%. This is it here. Equals to what? 60 per unit over selling price. Now, I make selling price my subject of the formula. Meaning I want to get selling price, so I will now come and put it in equation 1. Where is it? Now, I will put the selling price now. I got my selling price from this place. From this equation, I got it as what? 10 over 6 per unit. Then I will now come and put this 10 over 6 into this place. That's what I did here. So let's say equation 2.
But how did you get 10 over 6?
I'm coming to substitute 10 over 6 CT per unit for SP in equation 1. This is equation 1. Now you ask that get my what?
How do you get 10 over 6?
You are saying 1 divided by 0.6. Yes. What is 0.6? They are saying 1 divided by 10 over 6. Right? Yeah. Now, no, it's not 10 over 6 over 10. Okay. Then, my divide want to change to times. This one will go, this one will come down. It will become what? 1 times what? 10 over 6. As I got 10 over 6. I don't want to use calculator figure of getting 0.666. When I get it, I will not get the exact answer. Do you get? I will not get the exact
0.666.
I will not get the exact 30. I might be getting 29 point something or 28. And if I approximate, I'm still getting it. But now, SP equals to CT per unit divided by 0.6. And I got 10 over 6 CT per unit. So what I have, my selling price now is this figure. Is this figure I will not carry here. When I carry it here, this is it. Right? Yes. So when I carry it here, then I can say this one will come here. I collected like things. This number come here. Anything I see over unit will come to one place. This one come here, that's what I did here, and this other one will come here. So when I subtract 10 over 6 minus 1, you will get 2 over 3. Then when I cross multiply,
Why is that three words?
Eh?
Wait, come again.
When you subtract 10 over 6 minus 1 city per unit, you get 2 over 3.
10 over 6.
10 over 6 minus 1, what will you get?
1.6 to 10 over 6. Minus 1.6. 1.6 is 2 over 3. 10 over 6. So yes. You don't know this in decimal format. Come back that way. Why not? 2 over 3.
2 over 3.
Yes.
That 2 over 3, when I like cross multiply, 3 times 20, 60, abi?
Yes.
1 times 260 is what? 260, abi? So now, I can divide both sides by what? 2. When I divide both sides by 2, I will get that 60 is what? 80. That is it. Now, we've gotten that. The next question says that because most of the time, they might want to choose because now this data is not complete.
Yes.
They did not give us sales, but they gave us what? Sales units. And most of the time, what we usually use is what? Selling price. So we now have to derive our selling price by ourselves. Now, if you can do this one, then others will not be happy. Because to get the next question, they said get budgeted total profit. So now, let me use have you started? Now that we know our selling city per unit is what? Is 30. We are aware that our city per unit is 30 now. We can get our what? Our selling price, right?
Yes.
We know our city per unit. We can get our what? Selling price. Because we know that this is the AI I want to do now. Our city per unit equals to what? SP minus what? VC per. Our city is what? 30. Our SP we don't know, right? And our VC per unit is what? 20. That means our SP is going to what? 30 plus 20, which is what? 50. We've gotten our what? Selling price. Now, don't forget that profit equals to what? Contribution. Profit, let me write it. Profit equals to what? Contribution minus what? Fixed cost. You know, when we are doing MCT, when we get to contribution, what we now do to it? We less what? Fixed cost to get what? Profit.
Yes, yes.
Right? So now, if I divide both sides by unit, if I divide both sides by unit, then I can say profit per unit equals to what? CT per unit, right?
Yes.
Minus what? FC per unit. What is CT per unit? 30. Minus FC per unit is what?
25.
That means profit
5.
per unit is what? 5. Right? So if I now want to get my profit in value, just multiply by what?
By the selling price.
By the selling unit, sales unit.
Okay, by the sales unit. You
Yes.
won't use selling price.
You want to selling price.
Profit.
This is price per unit. This is profit per unit. You multiply it by what? By unit. So total profit.
Okay. So this one will now be valued at that.
Yes, is what? 5 times what?
8,000.
8,000.
That's
Which is
40,000.
40,000. Because everything became is when you got this one.
That's
So if you can get this city, others will be easy. And honestly, if you don't get the city, all the remaining questions that you cannot get it.
There's a man with steps.
No, you can't mark this one with steps. Because if I make a mistake and write 32 here, this one is gone. this one is wrong. All the next question is wrong. So this one is not step. Very big person. Okay, now the other way of solving it is that I can go from the selling price to the CT per unit. Now you notice that when I did this process, I got CT per unit first. Before I came here, I got what? Selling price, right?
Yes.
I can do another way that I will get what the selling price first for the CT per unit. That means I will still use this one. I know this, my equation 1, and I know this, my, let's say, equation 2. Let me come here and write it. CT per unit equals to what? SP minus what? VC per unit. When I divide both sides by SP, selling price over selling price over selling price, cancel, which remain what? Now, this is what? CS ratio, which is what? 60. 0.6. 0.6 equals to 1 minus 20. This is what? 20 over what? Selling price. So I can bring this one here that what? 20 over SP equals to what? 1 minus 0.6, which is what? 0.4. That's 20 over SP equals to what? 0.4. That implies that my SP is what? 20 over what? 0.4, which is to what? 50. Blah blah blah. If you like something increased by 10%, decreased by so it's still the same way we do it, but because of let's just move to multiple. Let's treat the question we did in class. Let's do that one. The one we did in class. One of that class. Let's do the one. So I don't think I have that. Let's start. For multi-products, meaning more than one multi-products. So, the question we did last time was for single product. We are going to be choosing multi-products. Now, about this, I can pass question. I can PQ. 20, I said 2022.
Yeah, 2022.
2022. Question 5. Now, they said about the sales to major product and budgeted income statement for the year to March, December 31st, 2022 is given below. Now, we have A, B. We have A, B, and we have the total. Now, we have sales, we have production costs, we have material, we're giving everything, but they did not give us what? If you notice this question, they did not give us anything like what? Sales unit. So we have to forward get our sales unit first. How do we get to our sales unit? Sales divided by what? Selling price. Were we giving sales? Yes. Were we giving selling price? Yes. So now our sales here is what? For A is what? 8 for 100.
Everything in millions, sir.
It's not in million, thousand.
Thousands, sir. Move it.
Now, 8 for 25,200. So we have the sum of 33,600. Now, I told you we are getting our sales unit. So we need our what? Sales and what? Our selling price. Our selling price. Our selling price is what? 120 for A, you see it in the question, and 180 for B.
Yeah.
So when we now divide both of them,
You get the unit.
we get the what? The sales unit. Divide this by this, what do you have? 70. Divide this by this. 140. So now we know that our sales unit for A is 70 and our sales unit for B is what? 140. Now we need to get all that things. So if me I'm going to do my own, I will make sure all my data apart from, because we need to get contribution. Remember that the first step told us to get determine the break-even sales in unit for each product using the budgeted data. So now, our BEP in units is what? Is fixed cost, total fixed cost over what? Contribution per unit. This one is for, I'm going to log it. This CT per unit now is for single product. So, but if I want to get for multiple products, we are going to get what? Weighted average contribution per unit. But before we can even say we want to get weighted average contribution per unit, we need to get what? CT per unit. So CT per unit is the first thing we are going to get. Now, for us to get CT per unit, we know is that is what? Selling price minus variable cost per unit. So I want to put everything in units. So I will create the thing in unit. A, B. So now, from the table, we have our sales as what? Our selling price as what? Our selling price here is what? 120, I mean? Our selling price here is 160, right? Now, we need to do our what? Variable production cost.
You do 160 or 180?
Sorry, 180. Now, selling price minus variable cost per unit. I need to know my variable cost per unit. We have direct material cost per unit, direct labor cost per unit, variable production overhead cost per unit. So all those figures I have here, I will be dividing it by individual unit. So I'll tell you to divide, so you give me the data.
Okay, sir.
So now, for the direct material now, so when I want to write it, I'll do like this. Now, our selling price is, we say this one is what? 120. And this one is what? 180. So what's our direct material? Now, our direct material for A is 1 million, or you can say, our direct material is what? 2,240, right?
Yeah.
Now, divided by 70, what do you have? 2,040 divided by 70 by the unit. Because I must put them in what? 32, right? Now, for A also, my direct labor, 1,120, what do we have? Divided by 70. 16. Now, next one, my variable overhead. 16, right? Now, so you know that all these three things, when we sum them together, that's what we call our what? Variable production cost. But now they are in units, so we call it variable production cost per unit, which we also call VC per unit. So now let's do for B. Now for B, we have, for material, we have 5,040 divided by 140. What do you have? 86. Right? 86. I was like, it's not supposed to be there. Now, 3,360 for direct labor divided by 140, what do we have? 24. Now, the next one is variable overhead, 2,240 divided by 140, what do we have? 16. Now, when we sum this together, what do we have?
We have 64. For the variable cost, 64.
64. Yes. Now for this one, what do we have?
76.
76.
Now,
so 180. This one, my option is
56.
56. This one is what? 104. Now. So these are our contribution per unit, CT per unit, because we know that what selling price minus all these three is what we call production cost, right? When we subtract it, we get our what? Contribution per unit. So our contribution per unit is this. Now we've gotten our contribution per unit. we now need to get our what? Weighted average contribution per unit. Now, before you can weight something, you need to weight by something. Now, in this instance, you see that we are doing this answer is contribution what per unit, I mean. So that means what we are going to use it to weigh, what we are going to use to weigh contribution per unit is going to be what? Units.
Because this one is in units.
Because this thing is 60 per unit, right?
Yes.
What we are going to use to weigh this 60 per unit is still unit. When we are doing CMR, CS ratio, you know it is contribution divided by sales, have you?
Yes.
What we are going to use to weigh it that time is going to be what? Sales. Do you understand? This one is 60 per unit. What we are going to use to weigh it is what? Units. When we get to CMR, when we are getting values, BEP in value, you know is total fixed cost over contribution per sales, have you?
Yes.
That contribution per sales, we are not going to put contribution per sales, they are going to do weighted average contribution per sales. This one is what? Contribution per unit. We are going to weight by unit. That one is what? Contribution over what? Sales. We are going to weight by what? Sales. So now, what is the unit for A and B? So now, we want to weigh. Weighted. Let me clean this, please. Where is the dust? Okay. Ratio. We want to get the ratio. The ratio we are going to use for weighted average. Now we know that A and B, A ratio B in units is what? 70 ratio what? 140. 70 here 1, 70 here what? 2. And one side is 1 ratio what? 2. Now we now want to do our weighted average CT per what? Per unit. Now, what we are going to do is that we will multiply. This one is for A, right? This 2 is for B, right? What's our contribution per unit? So that means our A now is going to be what? The contribution is what? 56, I mean? Yes. And B is what?
104.
104. You will now multiply 56 by 1, right? It's going to give you what?
56.
Multiply 204 by 2. It's going to give us what?
2. That's
208. When I add this together, what do I have?
264.
264. When I add this together, what do I have? 3. Now, how you will now get your weighted average is that you will now say 264 divided by what? 3 will give us what?
88.
88. Now, 264, 88 per unit. Do you understand what I'm doing? Do you understand? Ask question.
Yes. See the flow.
Now, you've gotten your what? Weighted average. Now, we can now get our what? BEP in what? In units. BEP in units is what? Total fixed cost over what? Weighted average CT per what? Per unit. What's our total fixed cost? Now, in the question, they told us variable overhead, the total they gave us is what? 2,240. His fixed cost we are defining. The fixed overhead cost they gave us there is what? 2,240. So now I want to get my total fixed cost. Total fixed cost. So what we have first is what? I'll do this later. Now, the first thing that we have, I have my fixed overhead. Fixed overhead. My fixed overhead is what? 2,240. 2240. Now, my fixed selling and distribution, my total fixed cost. The way we get total fixed cost is to do fixed production and fixed non-production. We add it together. My fixed production overhead is 2,240. I will now add my fixed selling and distribution because it's not production. So my fixed selling and distribution is what? 8,320. When I add this together, what do I have?
10,560.
10,560. Now I cannot put this here. That means my BEP in units equals 10,560, which we know is as 10,560 because we already added this one. Over what? What's our weighted average? It is. So when we divide it, what do we have?
120.
120.
That was 120,000.
120,000 units. But this 120,000 units that is here is for both A and B. So we now need to separate it. So sharing it.
Sorry,
So
why do we need to share it if we are dealing with multiple products?
we need to share it because when we were coming from here, we joined the two contribution per unit to one.
Yes.
It was 156 and 104.
Yes.
We did the weighted and it became one.
Yes.
And when we now did our BEP, we got one value. This one value too needs to be separated for A and what? A and B. Now, our A now, what's the ratio of A? A is 1. 1 over what? 3. 1 over 3 times what? 120.
That
Is
was
what?
40,000.
Then
40,000.
40,000. 40,000. And B will be what? 2 over 3 times 120.
80,000.
80,000. So that's the first answer. So just write that and let's move on. Now, adjustments were made. Now let's start with the first adjustment. The first adjustment is that what? The first adjustment, they said now assume that the following changes are made to the budget. Now the first adjustment is that what? Selling price of B is reduced to what? 160. That means for selling price of B, SB of what? B moves from what? 180 to what? 160. Now, selling price of B moves from what? 180 to 160. Now, the next thing is that direct material cost is expected to drop by 10%. That means normally 100%, let's say it's dropped by 10%, that will be what? It will remain what? 90%. So we can do 90 times the figure. So now the second assumption, direct material is what?
32,000.
So what I'll be using is I will not be using the figure in this place, I'll be using the unit already. The unit I got now. You understand? I'll be using the unit. So now I will now do for A, direct material for A now is going to be what? 100 minus 10% times, what is direct material? 32. You know we've converted everything to units now. Times 32. So when we do this, it's 90% of what? 32. Which is what? 28.8. Now, for B, they said B was what? 20%. Reduced by what? 20%. Meaning what? 100 minus 20% times what? What is B? 36. 36. Okay, that's 90% of times 80%. So the 80% times 36 is what? 28.8. So we don't. So now the third assumption They said direct labor cost for each product will be increased by what? By 10%. So direct labor for each product will increase by 10%. That means direct labor for A will be what? 100 plus 10% of what? Of 16, right? So that's what? 110% times what? 16. You got what? 17.6. For B now, it's going to be what? 100 plus 10% of what? 24. Which is what? 110% times what? 24. Which is what? 26.4. Right? Now, the fourth adjustment, fourth assumption is that additional 465,000 will be spent on advertisement. Now, advertisement is a fixed cost. Yes, it's a fixed cost, and it's non-production. So now we are going to add it to the fixed cost that we had before. The fixed cost we had before was what? 10,560. Yes. And you know I got that 10,560. We added the fixed overhead and the fixed sale and distribution. So now we now add total fixed cost plus advertisement. Which is equals to what? 10,560,000. Am I correct? 10,560,000. Yes. Plus what? Now they said additional 456,000 will be spent on what? Advertisement. So we had what? 456,000. When we had this, what do we have?
11 million.
11 million and 16,000. Now. Now, what's the fifth assumption? They told us that 80% of total revenue will be derived from product B. Meaning, the fifth assumption, that means for A, we have 20, for B, we have 80%. That's what they are saying. Now, they said 80% of the total revenue will be derived from product B. So let's say we have our total revenue now. 80% of that total revenue you have is for B. 20% is for A. So now, all the assumptions we've calculated, we've adjusted it accordingly. Now, we need other things. Now, you will notice that this CT per unit will change. Yes. The CT per unit must change. Because other things have already changed. So let's do the table. Now, the table is going to be, we have what? A and we have B. We have the Naira sign, 1, 2, 3. 1, 2, 3. Please, if you have question, ask. I'm saying you have 2, sir. So now, 120, 160, direct material per unit, direct labor per unit, labor overhead. So this one we have what? 28.8. This one we have what? 17.6. This one we have what? 26.4. This one, labor overhead we have what? 16. This one you told us we had what? 57. Are you correct?
No, 62.4.
62.4. And this one is what?
Calm down. 57.6 is the answer of A.
57.6. And this one is what? 71.2. Now, this is what we call CT per unit.
So now that is 88.8.
What's that?
On the other side, the contribution per unit.
Okay, 88.8. Now we've gotten our CT per unit, and we know that CS ratio, which is also CMR, is what we call we do CT per unit over what? Selling price. So we can now say what? This divided by this we get what the answer is. So that means our CS ratio is going to be what? This divided by this. So 5, if 0.6 divided by 120 is what?
0.48.
0.48. And this divided by this will go 0.555.
1.801.
Please do 88 divided by 160.
Oh, 88. 0.55.
0.555. Now, that's what we get as our what? Our CS ratio. Now, remember, we cannot use this CS ratio like that. It has to be weighted and when we want to be weighted by what will we use as our ratio? We use the sales. Because that time we are doing 60 per unit, we use the word the unit. Now that we are doing CS ratio, contribution per sale, we use the word sales as our ratio now. Now, we want to get revenue, budgeted revenue now. Let's now go to question B. They told us something. We've gotten the data we want now. Now, let's get what they say we should get. Now, let's get weighted what? Weighted average CS what? Ratio. Now, our A is what? Our A is what? 0.48 times what? I told you our sales we will use Abi. Now they told us in the assumption that A will use what? 20% and B will use what? 80%. So I'll multiply this one by what? 0.2. I'll give my answer. My B will now be what? 0.555 times 0.8. So this one should be 0.444 and this one should be 0.096. 0.096. So when I have these together, what do I have?
0.54.
0.54. Then I can see that my BEP value is what? Total fees cost over what? Over weighted average CS what? Ratio. But there were some data they did not give us. So let's continue from here. Now they told us in the question B, they said they told us that calculate how much sales revenue must be made to generate what? To generate how much sales revenue must be made to earn an after tax rate of 12% of that revenue. Now look at this. Look at this. We are aware that budgeted revenue, right? Anytime you are hearing tax, all those tax, that means it is target profit formula we are using, right? And look at the formula is what? Total fees cost plus what? Profit. Profit before. Profit before what? Tax. Over what? It will not be what? Weighted average contribution per unit, right? But now they do not give us our budgeted revenue. Even the profit after before tax, they do not give us. They give us in form of what? Profit after tax. But now they are not telling us that the profit after tax is 12% of profit before is 12% of the what? Revenue. So let's now say budgeted revenue be what? The X. That means profit after tax is what? They said profit after tax is 12% of the revenue. That means it's going to be what? 12% of what? Of X. Right? You don't know what X is. Do you get what I'm saying? Now, 12% is what? 0.12 times x will give us what? 0.12x. But this is profit after tax. It must be what? Profit before tax. What is the formula for profit before tax? We know that PBT equals to what? PAT over what? 1 minus what? Tax rate.
Tax rate, yes.
Now, the tax rate we're giving this question is 40%. Meaning 0.12x, right?
Yes.
Over 1 minus what? 0.4. It's 40%, I think. Yes, 0.4. So, what is 1 minus 0.4? Give us 0.6. So that's what? 0.12x over what? 0.6. So 0.12 divided by 0.6 will give us what? Should we get it around 0.2?
0.2.
So we are going to be having what? 0.2x as our what? Profit before tax. Now they told us profit after tax is what? 12%. Now using this formula, we got our profit before tax as well, 0.2x. Because in this formula, it's profit before tax that is there. We don't know our x, so we just put it back in. That means what? Budgeted revenue, I said budgeted revenue to be what? X. That means x equals to our total fixed cost from the adjustment here is what? 11,060,000. That's what? 11,016,000 plus what? 0.12 x over what? Weighted average contribution. Sales per contribution per sales ratio. And we've gotten it there, which is what? 0.4. So we now divide it by 0.54. We got at 0.54. So now we must multiply here. Because anytime you are giving a missing figure, most of the time you have to be doing all this kind of process, finding x. You have to find x. So now when I just multiply, I will say what? 0.54x equals to 11,016,000 plus what? 0.2 that is here, please. Because it's PBT we are using, right?
Yes.
0.2 what? X. So now I can collect items. This one will come in. So that's what? 0.54x minus what? 0.2x equals to what? 11,016,000. So if I divide both sides by what? 0.54. No, sorry.
Now 0.
So this one is what? 0.34x equals to what? 11,016,000. Divide both sides by 0.34. What do we have? We should have our x as well. So let me use this please.
50,240,000.
32,400,000. You see that this figure is combining the revenue of A and B. Now we need to separate it. Now, when we are going to share it, now you can see that we've gotten our x now.
Yes.
Now, what is for A? We said that A is getting 20% of the revenue and B is getting what? 80%. So A is going to be what? 0.2 times what? 32,400, right? And B is going to be what? 0.8 times 32,400,000.
So A is 6,480,000.
6,480,000. And B is what?
25,920,000.
25,920,000. So that's it. So just write it. Continue. So this one is 5 marks. Next question. Assuming all the facts that we just assumed 1 to 5 are both true, but with the original budgeted product budgeted revenue as so now we are doing C. They said the budgeted revenue we should use in this C is what? 33,600,000, right? Now you can see that normally what is the projected revenue we are supposed to use? This one. Now they are saying it's this one we should use. That means I still need to share it in the same ratio of what? 80 and what? 20. So now let me do A and B. Our ratio is what? 20. And this one is what? 80%. So help me share. So if we say revenue, sales, help me share 20% of 33,600 is what? 6 million 720,000. So do the 80% of this. 26 million. Now, the reason why we are doing all these things is that they told us to compute the revised break-even sales in units. You know that when we are doing break-even sales in units, we have what? Total fixed cost over what? Total fixed cost over what? Weighted average contribution per unit. We've gotten our contribution per unit, that one. You will see we got 88.8 for B. Check the table that we did. 88.8 for B. 57.6 for what? For A. We've gotten it. But now, and you know that we now have the ratio for us to divide this, right? But now, we need to, the ratio that we use to divide the units. You know now, the formula is, let me write this on. So, BEP in units is what? Total fixed cost over what? Weighted average what? CT per unit. And I told you, it is CT per unit we want, Abi? Yes. What are we going to use as the ratio?
Contribution per unit.
No. We are doing CT per unit. Before we are using sales, contribution per sales. We use what? Sales.
No, we use contribution per unit.
No. We are doing, before, when we are doing revenue, we use sales. Wait now. When we are doing revenue, it was what? Contribution per sales that we are dealing with. What do we use as our ratio? Sales. And I told you that when we are doing contribution per unit, we use what? Unit as our ratio. When it is, see, when it is CT per unit, we use what? Unit as our ratio. When it is CS, we use what? Sales as our what? Ratio. But now, we don't know the sales because they told us that the adjustment, we already adjusted something here. We adjusted, this is our what? Our sales now. Our selling price is 120 here and it's 160 here. Right? So now you know, if we divide this by this, divide it by what do we have?
56,000.
Okay, that means our sales units, right? This one is what? 56,000. And this one is what? 168,000 units. Naira. You can see that their sales unit has changed. Before, when there was no adjustment, we had 70,000 units, right? And we had 140. Now it is 56 what? 168. It has changed. That means the ratio too will change. So what is the ratio now? Ratio in units. Because it's this ratio we need to use for what? Our weighted average CT per unit. So our ratio is what? Our ratio 3. Now, our BEP, let's now get our what? Weighted average CT per what unit. For A, we have what? Our A, what is our contribution per unit? For A, contribution per not CS ratio. Contribution per unit. 57.6. Times what? 1. You know why we times by 1? Because this is the issue. Now the next one is what? BRB.
88.8.
88.8. That is what? 3. What's that?
266.4.
266.4. When I add this together, what do I have? There will not be decimal again.
324.
324. And what? This is what? 4. So that means my weighted average contribution per unit is going to be what? 324 divided by what? 4, which is what? 81 naira. Right? So now when I want to do my BEP in units is going to be total fixed cost that we got was what? 11 million and 16,000. 11 million and 16,000 divided by what is our weighted average? 81. Weighted average contribution 81. So when I divide this by what will I have?
136,000.
136. Okay, 136,000 units. Now this 136,000 units for both, right? I will not share it. So my A is always getting what? 0.2%, right? That is what? 136. What do I have? And my B will get what? 0.8 times 136,000. What do I have?
27,200.
Eh?
27,200.
A
0.2 times 136,000. 27,200.
27,200. No! This is not what we are supposed to do. We are not using this sales. Is this what we are using? This ratio we are using. You understand? This ratio is for the revenue. This ratio is for the what? The unit. So let me put it. Sales. This one is for the unit. This one is for the what? So is this one is what? 1 over what? 4 times what? 136,000. And 3 over 4 times what? 136,000. 34,000. And this one is what?
102,000.
102,000 units. So that's it. Oh yeah. Let's do that.